this is the second part of our discussion on gross income. So in this video, we'll discuss more on the compensation income, its sources, its examples, and its taxability. So if you're ready, let's start. So now at this point, we'll discuss the sources of income. Before computing income tax, which will be discussed in the later discussions, in the later lessons, it is necessary for us first to identify the items included in the gross income of the taxpayer, whether an individual or a corporate taxpayer. So in general, the sources of income are classified into four. So we have four items in general sense. First, the compensation income. This income is derived from from the employment, which means when we say employment, meaning to say that the taxpayer is being employed and there is an employer-employee relationship. So aside from that, compensation income, the taxpayer can also earn income from business and doing professional services. Okay? If the taxpayer is engaged into selling of goods or selling of service or into business in general. And the taxpayer may also earn passive incomes. When you say passive incomes, these are incomes which the taxpayers are not actively engaged into but still continue to receive. For example, dividends or interest. We also have capital gains. Capital gains is the gains derived or the excess of money derived from the sale of capital assets. So these are the four categories or sources of income in general that we need to understand. So in this video, we will focus on the compensation income first. And in the next videos, we'll have the business and passive incomes and capital gains. So I hope you'd watch the other videos in this lesson. So let's focus in the compensation income. Compensation income, these are all remunerations or payments for services performed by an employee for his employer under an employer-employee relationship unless specifically excluded by the code. So when we say compensation income, these are any income, any payment made by the employer to his employee. uh, when we say employer, this is the person employing someone. And when we say employee, this is the person rendering service for someone. Okay? So there is an employer-employee relationship. This is not just a casual work or casual job, a temporary job. This is a regular job with a contract, an agreement. So any remunerations received by the employee from his employer shall be considered as compensation income. However, not all compensation incomes are subject to tax. And not all employees are subject to tax. There are some exemptions. So we need to carefully understand who or what are these items of compensations which are not subject to tax and which are subject to tax. Okay? So the following are examples of compensation income. There are a lot of items that can be considered as compensation income. Okay? So these are just examples. So first we have salaries and wages. When you say salaries, these are fixed rate, usually or regularly received by an employee from his employer. When you say wages, these are daily wage or daily rate given by the employer to his employee. So when the taxpayer is a minimum wage earner, meaning to say his daily wage does not exceed the regular or the prescribed amount, the prescribed minimum wage, then that employee is exempted from the tax. Again, when the employee is a minimum wage earner, then his income shall be exempted from the income tax. Okay? So we also have bonuses and other benefits. These are extra pays, extra money given by the employer to to their employees. And then these are subject to the limit of 90,000 pesos. So later on, we will elaborate what is this 90,000 limit. We also have holiday pay. For example, it's holiday and you're required to work on holidays. Any payment thereon shall be considered also as compensation income subject to tax. And overtime pay when you are required to work overtime, meaning in excess of your regular time. We also have night shift differential if you'll be working during the night, and hazard pay if your work involves hazardous or dangerous activities, or if you are working on a dangerous zones. Okay, so these compensation incomes are subject to income tax. These are taxable in general sense. However, if these items are received by the minimum wage earner, all of these are exempted from the tax. Okay? So all of these are non-taxable or exempt from income tax if the receiver is a minimum wage earner. So take note of that. Aside from these six items, we also have allowances. Allowances, these are uh, small amounts given by the employer to their employees because maybe the employees are required to do something. So, for example, the rata or representation and transportation allowance. So, if the employee is sent outside, let's say it's sent for a meeting or a seminar outside of the city or outside of province, then that allowance could be considered as compensation income. However, the taxability of such allowance depends whether the item is liquidated or not. So, if the rata or if the representation and transportation allowance is required to be liquidated and any excess shall be returned to the employer, then that rata is not a compensation income of the employee because it is liquidated. Okay? But for example, if the rata is not required to be liquidated in its total sense or its entirety, then that rata is considered as a compensation income, therefore taxable. Okay? So for example, if you are the employee and you are sent outside of the province to attend a seminar and you are given a rata of 10,000 pesos, and then you are not required to submit anything or to liquidate that 10,000, then that can be considered as your income, a compensation income subject to tax. However, if your employer require you to liquidate and submit all documents to prove that this amount was used, then that cannot be considered as your compensation income. Okay? So how about if you are going to liquidate but any excess is not refundable or not returnable? So for example, you are given 10,000 and then you have to liquidate that. Let's say out of 10,000 you only spent, let's say, 6,000, leaving 4,000 excess, no? So if the excess is not returned, again, if the excess which is not used is not returned to the employer, then that excess which is not returned can be considered as your income, therefore taxable. But if the excess is returned to the employer, then again, that is entirely non-taxable. Okay? So, we also have the personal economic relief allowance. So, there will be instances wherein the employer will give extra allowance just to compensate the employee for as a relief, no? For example, if the employee is involved in a job or a task wherein he is burdened to spend on something, and then the employer thinks that it is better appropriate for him to compensate the employee to relieve him of the economic burden of such job, then that pera or allowance shall be considered as compensation income. However, again, it depends whether it is liquidated or not. Like rata, if the pera is liquidated, then that is not your compensation income. If the pera, however, is not liquidated, it's just given to you freely, then that is a compensation income subject to tax. However, these scenarios is or assume that the employee is a private employee. If the employer is a government or any government agency, the rata and the pera will always be exempted from the tax. Okay? Regardless of whether these are liquidated or not, if the employer is the government or any government agency, then these are not subject to tax. Okay? So these are subject to tax. These two items are only subject to tax if, number one, given by an employer who is a private person or private company, and then that is also not liquidated. Okay? So if the employer is the government, then that is not taxable, non-taxable. If the employer requires to liquidate these items, then also that is non-taxable. Okay? So next we have additional compensation allowance. It's similar to rata and pera, and again, they follow the same rules. We also have living quarter or meals allowances. So for example, you are a laborer of a construction company, or any you are a person of any company, and then you are given free boarding house or free living quarters, you have free meals, you have free allowances. Again, these are considered as your compensation income. But the question as to whether these are taxable or not depends on who benefit these meals and allowances. Okay? So, if, for example, in the case of housemaids, wherein they're required to live with their amo or with their bosses, then that is for the benefit of their employers, right? So then that is non-taxable. Okay? That is non-taxable because the employers are benefited. But for example, if the employers, for example, if you are if a housemaid is let's say not required to live with their bosses, with their employers, but they are given free meals. Okay, just free meals. They can they can go back to their homes every day, but they're given free meals, just free meals. Let's say morning and lunch and dinner. So free meals. So since there are no benefit derived by the employer from giving these meal allowances, then that is considered as compensation income subject to tax. Okay, so next we have facilities and privileges of a relatively small value. We call this de minimis. So de minimis are subject to limitations. There are later on we'll discuss de minimis. These are small allowances like rice or medicine or Christmas bonuses or Christmas gifts. So again, these are discussed later on. And again, these are considered as compensation income. We also have vacation and sick leave allowances. So this is under de minimis, and again, we'll discuss more of this in our succeeding videos. Aside from allowances, we also have tips and gratuities. So when I say tips, these are payment we made usually in a restaurant or for some dining experience. So these tips are taxable. Gratuities, on the other hand, are payment personally made by to the priest or a celebrant for initiating a christening, for example. So this is not an offertory, this is not an offering, but a personal payment made to the priest or a celebrant. Okay, these tips and gratuities are actually taxable compensation income, but in reality, it still depends whether they will declare this or not. But in its ideal sense, tips and gratuities are taxable and are subject to income tax. Okay, we also have honoraria and other emoluments. So if you are invited to speak in a workshop or a seminar and you're given an honorarium, okay, so that is considered as taxable compensation income. We also have commissions. If you are working on a commission basis, then your commission are subject to tax. We also have retirement pay and other similar remunerations. So any payment made by the employer to the employee for once the employee retire from the company for his invaluable service in the company. So retirement pay and other similar remunerations are, in general, as a general rule, these are taxable. These are subject to tax. However, retirement pay and other similar remunerations like separation pay may be exempted from the tax if the following four requirements are met. Okay, so number one, if the employee is at least 50 years old at a time of retirement. So, if the employee retires at the age of 50 or more, then that retirement pay could be exempted from the tax. Otherwise, if he retires, let's say at the age below 50 years old, then that retirement pay is taxable. And another requirement is if the employee has rendered service for 10 years in the same company. Okay, 10 years. And then if the employee has availed the retirement pay for the very first time, it is his first time to retire, then that is also exempted from the tax. And finally, if such private benefit plan is approved by the BAR, so when every company is required by the BAR to have their separate private benefit plan so that when one or two or several of the employees will retire from the company has something or has a fund to pay for the retirement pay of their employees. So again, these four requirements should be met. All of them should be met so that the retirement pay could be exempted from the tax. Otherwise, if one of these four requirements are not met or is not met, then the entire retirement pay is taxable. Okay? So next we have separation pay. So separation pay is a payment made by the employer to his employee once the employee resigns or stop from being employed. Okay, so separation pay is not a retirement pay. A retirement pay is something that is received only once you retire. So separation pay in its as a rule is actually subject to income tax. Okay? So it is subject to income tax. However, separation pay could be exempted, again, could be exempted if the reason why you separate from being employed is involuntary. Okay? If the reason of the resignation or separation is involuntary, then that separation pay is exempted from the tax. So for example, if you are a driver, a company driver, and then you intend to stop from being employed or you intend to resign from the company for whatever reason, okay, so that is voluntary resignation. Therefore, since it's voluntary resignation, whatever payment made by the company to you as separation pay is subject to income tax. Okay? However, if you are a company driver and then you met an accident causing a severe injury on your part in which it resulted to you being unfit for the job, being a company driver, then of course you would resign from the company, right? So since the reason for the resignation is an accident, which is an involuntary part on the employee, then the separation pay could be exempted from the tax. Okay? So next we have proceeds of life insurance. So always remember, any proceeds of life insurance will never ever be subject to income tax. Okay? So when the beneficiary is, or when the insured person, so for example, I am the insurer, I am the insured person, and then I nominate some three people to be my beneficiary, and then I died, for example, then any proceeds received by my beneficiary from the insurance company will be exempted from the income tax. Okay? It will always be exempted from the income tax. However, if I survived my policy, say for example, my policy is good for 10 years, and if I don't die in 10 years, and I will get whatever investment I had with the insurance company. Okay, so I am alive, and then I receive the entire amount of my investment, the fund value. Then that could be the time when such proceeds will be subject to income tax. Okay? Again, if there is death, then that proceeds is exempted from the tax, from the income tax. But if the insured person survived the policy and received himself the proceeds of the fund value of the insurance, then that is subject to income tax. However, only the gains. Okay, only the gains. So finally, we have fees, including director's fee, if the director is at the same time an employee of the employer corporation. So again, this is considered as a taxable compensation income. Now remember this, as a rule, every income is generally taxable unless specifically exempted by the law and the requirements to be exempted are met. And the situs or place of compensation income is where the services are rendered, regardless of the residence of the payor. Okay? So compensation income is computed as follows. So first, we have this general formula. And then first, we annualize the compensation income. When I say annualized, meaning we multiply the monthly or the regular payment into 12 months. So we get the total annual compensation income if the employee is receiving is a fixed salary rate. Okay. Then we add the bonuses and other benefits. So these are the 13-month pay, the small value privilege like de minimis and other benefits to get the total gross compensation income. So this total gross compensation income includes both the taxable and non-taxable component. Okay, so that includes both the taxable and non-taxable component. After we get the total gross compensation income, we will now deduct the non-taxable compensation income because not everything in the compensation income we have computed above is subject to tax. So as I have said, there are some items which are not subject to tax, such as the bonuses, subject to the limit of 90,000 pesos. So, for example, we have the 13th-month pay and other benefits. So, any 13th-month pay, any bonuses and other benefits received by the employee from his employer will be exempted from the tax, will not be subject to tax, provided that the total amount do not exceed the 90,000 pesos limit. Okay? So for example, if the 13-month pay is 100,000, then we will deduct the entire 90,000, leaving 10,000 as still part of the taxable compensation income. Okay? So if, on the other hand, the employee receives, let's say, 70,000, 13-month pay and other benefits, so the entire 70,000 is deducted from the total gross compensation income. Why? Because it does not exceed the limit of 90,000 pesos. Okay? So, after we deduct the non-taxable compensation income, we will get the compensation income subject to tax. So, this compensation income is not yet the taxable income. Still, it is subject to tax, but not yet. Not yet the final or the net taxable income, because we still need to deduct the mandatory deductions such as the PhilHealth, the Social Security System premiums, and then the Pag-ibig or the HDMF, Housing Development and HDMF. So after we deduct the mandatory deductions, then we'll get the taxable compensation income. So this is now where we will base our income tax. Okay? So let's have an example. Danny, a resident of Cebu, is employed as the head accountant of X company. During the year 2018, he had the following data pertaining to his income. So Danny received the following. His monthly basic salary is 29,000. His mid-year bonus is 20,000. His 13th month pay bonus is 29,000. And productivity bonus received during Christmas, we have 25,000. He also had this SS monthly contribution. And again, this is monthly. PhilHealth, so insurance monthly contributions. These are mandatory contributions, by the way. We also have the Housing Development and Mutual Fund, or the HDMF or the Pag-ibig, that is 200 pesos, rather. We also have monthly premiums paid on health and hospitalization insurance. So this is another insurance of Danny. Okay? So 3,000 pesos. And Danny had the following personal, family, and living expenses, a total of 200,000 pesos. So compute our challenge, our task is to compute the taxable compensation income of Danny. Okay? So what do we need here? We need these four items to be annualized, to be projected into 1 year so that we can compute the annualized or total gross compensation income. So our solution would be, in computing the taxable compensation income, remember to multiply the monthly figures by 12 months since the income tax is computed on the annual basis. So you have monthly basic salary, so 29 times 12. Mid-year bonus, since it's a mid-year bonus, you don't have to multiply that with 12 months. Then we have 13-month pay, that's 29, and productivity incentives or bonus received during Christmas. So a total of 422,000 pesos. So this total compensation income includes both the taxable and non-taxable component. Okay? So after we get the total compensation income, now let's proceed to the computation of compensation income subject to tax. So again, we just carried over the 422,000 less non-taxable compensation. Mid-year bonus is not subject to tax, that is exempted. 13-month pay also, and productivity incentives, a bonus, a total of 74. So let us check first. Is 74,000 exceeding 90,000? The answer is no. Therefore, there is no, for on the part of bonuses and other benefits, there is no excess amount. There is no excess amount in excess of 90,000. Therefore, the entire 74,000 should be deducted from our total compensation income. So, next, you might be asking me, how about if the total bonuses and other benefits is 104,000? Okay, how about that? So in that case, wherein the total bonuses and other benefits exceed the threshold limit of 90,000, then we will deduct the entirely the 90,000 limit. Okay? Just the 90,000 limit. So again, If the total bonuses and other benefits exceed the 90,000 limit, then we will deduct the 90,000 pesos limit from our total compensation income. However, in this case, since the total bonuses does not exceed 90,000, therefore we will just deduct the 74,000. So after this, we will get the compensation income subject to tax, or we call this taxable compensation. So if you will imagine this, the 348 is subject to tax, while the 74 is not subject to tax. If you will add 74 and 348, we will derive the total compensation income of 422,000 pesos. So after we get the taxable compensation income, again, this is not yet the final figure. We still need to deduct the mandatory contributions. So again, we carried over the amount less the mandatory deductions, exemptions for tax. So these are provided by the law to be deducted from the compensation income. And these are the SS monthly contribution, the Pag-ibig, the PhilHealth. So a total of 1,300. However, since this is monthly contributions, we need to multiply this by 12 months. So we get 15,600. And we will deduct the 15,600 from our taxable compensation income. You might be asking, where is the personal insurance? Where? Okay, so just ignore that part because it is not necessary and it will never be deducted from our compensation income. How about the personal living and family expenses? Again, that is not deducted from our taxable compensation income. We only have to deduct these three figures, the SS, the PhilHealth, and the HDMF or the Pag-ibig, a total of 15,600. So we get 332,400. This is now our net taxable compensation income wherein we will compute our income tax, which later on we'll discuss in the later lessons, okay? So always remember this. In computing the taxable compensation income, the bonuses are added, okay? Because again, we are just computing the total compensation income. And total compensation income includes both taxable and non-taxable component. But in computing the compensation income subject to tax, all bonuses and other benefits must be subject to a limit of 90,000 pesos, as I have just discussed. If the total bonuses and other benefits exceed the 90,000, the excess thereof shall be taxable. Therefore, we can only deduct the entire 90,000. So again, if the total bonuses and other benefits, let's say it's 97, for example, 97,000, then we can only deduct the 90,000. Again, only the 90,000 pesos. Just leave the 7,000 pesos to be part of the taxable compensation income. Okay? If the total bonuses and other benefits do not exceed 90,000, okay, such bonuses and other benefits must not be subject to tax. Therefore, we will deduct the entire amount from the compensation income as what we did in Danny's problem. Let's have another example. Abby is a minimum wage earner employed at FCC company for the taxable year 2018. She had the following data. So Abby received a basic pay of 200,000. So this is an annual income already. We don't have to multiply this by 200 by 12 months. Also, apart from that, she also received holiday and overtime pay of 30,000 pesos in total, 13-month pay of 20,000 pesos, productivity incentives. You have annual mandatory contributions. So SS, PhilHealth, and Pag-ibig or the HDMF. So we are tasked to compute the gross compensation income of Abby. So it's just the gross compensation income being asked, but we will show you how to compute the taxable income of Abby, assuming Abby is, of course, a minimum wage earner. Okay, so Our solution would include the following. First, the basic pay of 200,000, and then we will add the holiday pay and overtime pay of 30,000. 13-month pay, 20,000. Also have productivity incentives of 15,000. Annual gross compensation income is 265. Okay, so this is the answer to our question on how much is the Abby's total gross compensation income. However, is Abby subject to tax? The answer is no, because again, Abby is a minimum wage earner. So despite of the income, Abby is exempted from the tax. Okay? So to compute the net taxable income, we will deduct from the total gross compensation income those items which are considered as non-taxable. So first, we have the 13th month pay of 20,000 and productivity incentives of 15,000, so a total of 35,000. And then our threshold or limit is 20,000, so it does not exceed the limit. Therefore, we will deduct the entire 35,000 from the total gross compensation income. So we will get the taxable compensation income of 230,000 pesos. However, this is not yet the net taxable compensation income because we still have to deduct the mandatory contributions. So we have this, we carry over the 230,000 and less mandatory contributions. Again, this is already an annual, so we don't have to multiply this by 12 months. So SS, 10,000, PhilHealth, 1,200, and HDMF or Pag-ibig contribution, we have 1,000, a total of 12,200. So we'll deduct that to get the net taxable compensation income. And again, Abby will never be subject to tax because Abby is a minimum wage earner. When we say minimum wage earner, Abby's wage is just the minimum wage. Okay, so in every province or region in the Philippines, there is a corresponding minimum wage. So for example, in Caraga region, our minimum wage is 328 pesos per day daily. So if you are saving that amount per day, then that is exempted. You will be exempted from the tax. So despite that you would receive holiday pay or overtime pay or bonuses, you'll be exempted from the tax. In other regions, the minimum wage will reach 500 or 600 depending on where the region or province is situated. So usually it's in the capital region wherein there is a higher minimum wage. So again, even if you receive a high wage, but it's still the minimum wage, then you are considered as a minimum wage earner. So you try to compute your income, your daily wage, if you still in the bracket of minimum wage earner, because if you do, then you're considered as an MWE and therefore you will be exempted from the tax. So I hope you learned a lot from this discussion and I hope you're interested in computing compensation income because later on we will discuss on how to compute income tax on our compensation income with proper way of filing an income tax return. So please watch the next video on business income. Thank you for watching.